We are live. All right. Welcome to Let's Talk Markets live January 14th. Really thrilled to welcome back George Kailas from Prospero AI and Dennis Dick with Pre-Market Prep, the newly independent Pre-Market Prep.
True. Yeah, we're independent here now. We're 10 years under the Benzinga umbrella, but now we're on our own here. So we're trying to run a business here now, Pre-Market Prep. And I say we're zero revenue right now, so we got to figure out some revenue, but we will eventually. We're working on some stuff.
Only up from here, right?
Well, I can only go up. Yeah. Well, I guess it can go negative too. So revenue's hard to go negative. Profits definitely go negative. What's going on, guys?
How's it going? How you doing, George?
Surviving this market, right?
It's crazy. It's a crazy market.
So I think it's like, and I came up with an acronym for my year. And I wanted to come up with, I originally had CHOP written down because I thought it was going to be a choppy year. I couldn't find any stocks for like those letters. So I'm like, so I ended up going with FADE. FADE is my year, which basically it's starting the whole thing in the F and the FADE is FADE trade. FADE trade is basically selling rips and buying dips. When I was pitching it, I said, I wouldn't be surprised if the S&P ends up in the same place that it starts the year. I think you're just going to have a lot of chop, a lot of uncertainty. We don't know what tariffs are going to do to the markets, if it's going to bring back inflation, so much uncertainty that I was confident. And again, we're very early in my projection that I don't think it's going to be another 25% up here. I just don't see it. And I may be wrong, but maybe the AI story comes and saves us, which it definitely could. But I think it's going to be a choppy year. What do you guys think?
Yeah, I mean, it's I agree with it. I'm curious, George. Like your indicators are kind of all over the place right now, and what's that doing to you? Does that lead you towards sort of Dennis's view of the world, or do you think they're just sort of waiting to break out one way or the other?
It's not helping my sleep. I'll tell you that. Like, I feel like I'm waking up at 5 a.m. and needing to check the pre-market just to know what kind of day I'm in for. Because you're right. We have this huge and sometimes you'll see in a day like our QQQ net option sentiment and our SPY, maybe break apart a little bit. But I think we're going on like 5 days where we have QQQ at close to 40 and SPY close to 0. So yeah. It's been hard to play, and to give you just to give you all out there maybe some relief for what you might be going through. Like typically what I'll do in these situations is I'll look for momentum. And, we even made a score for that momentum score. And a perfect example is Eli Lilly is a stock I picked on over the weekend over UNH. And UNH I actually had last week because I was of the opinion that I said, okay, I think it's been beat up a lot. If there's anything I can rely on, maybe it's a bit of a rebound and it's starting to look good in our signals. So I picked Eli Lilly. And, not only did a lot of the momentum stocks that I picked, both technical momentum in our signals, different kinds of things, not only did they just like a lot of them go in the total other direction on Monday, Eli Lilly's having like a really bad day on bad news. And that's typically the kind of thing that we can pick up before it happens, seeing it fall a little in our signals and our option signals. So yeah, it's just a very tough market to read now. And I'd say, especially when you're saying when momentum can work against you, right? Where some stocks that are swinging well one day are swinging back in the other direction another day. That's an especially hard market to read, where doing well can actually work against you the next day.
Yeah, it's a contrarian market here right now. And I mean, we've been in a momentum market, not just for the last couple of years, but it feels like for like a decade we've been in the momentum market, where markets, we've had pockets, but even during the fall of 2020 and 2021, it was still a momentum market. It was just momentum to the downside. So, I mean, we kind of had the 2020 straight up, the 2021 straight down, and then basically 2022 to 2023, 2024, the recovery going straight up. So, I mean, it's been a momentum market. And I think like myself, I've been trading professionally 25 years. It's like I've got to like retrain myself to thinking back to what I was doing when we were in choppy markets. So I started the year really strong. I had actually one of my worst weeks last week trading that usually my day trading, I'm fairly consistent. I can make money pretty much, not on a daily basis, but on a weekly basis, I usually make money. And I actually was slightly down last week. It's rare for me on my day trading to lose money. Now, swing trading, long-term investing, it moves along with the markets. But, because I'm doing a lot of different arbitrage strategy, I'm doing a lot of different stuff. Even that stuff, to a certain extent, like my relationship-based stuff was a struggle as well. So, I mean, it's the environment we're in. This choppy market chops up a lot of different strategies. So I think as a trader, you need to retrain your thinking for a different market environment. And there is pockets of momentum. You're going to find pockets of momentum, which are going to be fun to trade. But I think, maybe we got to add some more contrarian strategies into our toolbox here if this market's going to continue to chop around.
So what do you guys think about how the market is pretty much back to where it was right at the election? I mean, that is just, I guess that's the chop, right? But it's
yeah.
I'm surprised by that, frankly. Like, I thought we were going to rally at least into inauguration. I thought there was going to be some positivity, some, the market loves a Trump presidency, loved it the first time until COVID hit, right? I thought that's what we would see at least through the first year. Now you're saying, it's chop. It looks like chop. There's all this uncertainty. We don't know what's going to happen with tariffs. We don't know what the impacts are going to be. We don't know how fast they're going to come on. We don't know what they're going to mean for inflation. We don't know what that'll mean for interest rates. We're getting all this, data points that are coming in. We have a hot jobs market last week, but we have PPI sort of coming in under expectations today. We've got CPI coming out tomorrow. Market seems to be pricing in fewer interest rate cuts this year. That's maybe putting a dampener on things. There's not like that exuberance that I thought we were going to see. Is that just sort of part and parcel of the chop and the fade trade, or is there something more here that maybe underneath the covers leaves you a little concerned?
I'm concerned. And George, if you want to go, you can go here too.
Yeah,
we were both didn't know who was going to go. Go, George.
Okay, so the only story that makes sense to me, and I try to think like as logically and linearly as possible when I can, right? The only story that makes sense to me is this one, right? Trump got elected, and everybody instantaneously said, oh, like Trump's going to be good for the stock market. Trump's going to be good for crypto. It rallied. And then I think it rallied so much that then some people have started to say to themselves, like, well, how much can like certain legislation even support, say, crypto, right? Are these good prices? It's hard to rationalize the prices without the actual policy, right? Like, even if you're saying like, oh, he's going to buy it as reserve currency, how much? Because how much matters in terms of the price, right? Okay, he's going to bring in someone that's more friendly to run the SEC. Great. What is the exact legislation that is going to happen? What is the timeline for it? All of that is going to have to affect the actual price. So I think you had this initial exuberance, and then now you're seeing people just be like, okay, but like, well, how do we exactly price that in? There's already been a huge Bitcoin rally. Like, what is there to support? And I think there's one more thing going on now in addition to all of that. And I think what's going on is people are starting to say like, well, what happens if inflation is a little stickier, right? Because I think to the point of what the market was excited about, Trump is going to do whatever he can to support the market. And I even think that will be making sure he has a Fed chair that is cutting rates, right? And I think then the question is, okay, if that happens, do we start getting inflation coming back? Or if we have this kind of artificially propped up market, does stagflation even come somewhere down the line? And maybe I don't think there's enough answers for all of that, and the market just doesn't know how to play this out. But that's my read.
I think you're right. I think the market just doesn't know how to read a Trump administration at all at this point in time. I mean, he's kind of all over the place, and so is the market. Like, think about, what he's talking about. We're obviously, even talking about the 51st state, which started as a joke. And now, it's come in like, and he's saying it almost in like serious. where he's going to push Canada, into an economic, depression here, where they're going to have no choice but to join up with the U.S. I mean, this is some talk here where the market doesn't even know what to do with that. I mean, there's a lot of political uncertainty in this market. With regards to the Fed, I don't think, he even has the power to get rid of Powell. So I think, Powell's going to be there. Maybe he's going to find a way, but, just to,
I think Trump can find a way to do anything.
He can find a way. So, George, I'm with you. He may find a way, but I don't think it's just imminent. Like, we know Gary Gensler's gone. Sure. Next week, he's out. He's gone.
He's done.
But Powell's not going to be as easy to get out of there. And honestly, Powell's done a pretty, like you can say, to the beginning, when the Fed obviously was behind the ball on inflation, they definitely were behind the ball. But they've managed the back half of this pretty well. I mean, you've got, Canada's in a lot worse situation where we're cutting rates here now, because the economy isn't holding up. The U.S. economy has held up very well, despite the obviously the rise in interest rates, and inflation has remained kind of in check now, at least by the CPI.
If you look at how the U.S. has managed COVID and post-COVID relative to the rest of the world, it is as much of an economic success story as I think you can have, right?
So.
And yes, behind the ball a bit on the inflation, but the inflation was going to happen, right? It was inevitable. It happened everywhere. It was not a U.S. story. And, having managed through it into what still appears to be a soft landing, which is quite unprecedented.
Amazing.
I think part of this chop might be the market's concern that Powell is on his way out, right? The market loves him, right? Let's be serious.
He's done a great job. He really has.
And he's done a good job. Yeah. And it's I think the personnel questions are significant. Like, we know what's going to happen at the SEC right now with Atkins. He's coming in, and that's very bullish. That's somebody who markets are going to thrive under, because he's going to be so hands off, right? He's going to be so deregulatory. Enforcement actions are going to dry up or be substantially reduced. That's what the market wants to hear. And that's going to be the theme throughout the regulatory agencies. But from a macroeconomic perspective, it's kind of crazy. Like, we have no idea who would be coming in to replace Powell. And as you're saying, the things that he is saying in terms of Canada and Greenland and these the tariffs that he has threatened, if you come at Canada, you're the U.S. and you come at Canada with these massive tariffs, you're also, you're cutting off your nose to spite your face. Like, that's going to be dramatically inflationary in the U.S.
It is.
As well. As the, I think, second largest trading partner behind Mexico for the U.S. I mean, you want to keep goods and services at a reasonable price. You work with your largest trading partners to do that. You don't penalize them. It seems really short-sighted to me, and surprising that it would even have a remote chance of being put into place, given what the inflationary effects would be.
And that's the scary thing. And I think that's the uncertainty. And that's why the Fed in themselves, they said it in the statement. I mean, they're taking a cautious approach because they don't know what the tariffs and what they're going to be, first of all, and what their effects are going to be here. They said it, in the I don't know if it was in the press or in the statement, but it was mentioned. They're obviously thinking about this. So, I mean, there's a reason, and you can just look at the TLT if you don't want any other bond. If you're not a bond trader, just bring up the TLT and look at it. I mean, long-term rates just keep going up here. I mean, the TLT was $100 back in September. It's 85. So if you're asking yourself, why the weakness in small caps? Why the weakness, and so many other, interest rate dependent names? I mean, higher rates are affecting this market now. They are affecting it dramatically. It seems like every other day we're talking about the TLT falling again. So, I mean, as we start talking about a 10-year at 5%, that becomes a problem for stocks too.
Mm-hmm. Mm-hmm.
Yeah, I think I got one more question on this while we're just on the Trump, and I'm like trying to think about this. Does Trump / the Trump administration, do they care about inflation? Like, I mean, at a high level, because you look at like all of this stuff in aggregate, and if you look at the last administration and things like, you know, in the typical inflationary cycle, I remember reading this and just being shocked that about 10% of it is due to corporate profits. And our last one, about 50% was due to corporate profits. And a lot of that was due to the corporate tax cut, right? Mm-hmm. So I'm looking at this in aggregate, and I'm just, does Trump / the Trump, do they care about inflation?
Yeah, it's a fair question, because on the one hand, obviously their primary goal is juice corporate profits, juice the stock market. That's always been, you know, one of the primary goals of his, and something that he always hangs his hat on and brags about.
Yeah, he sees
on
the stock market going up as success.
Right, exactly. You know, but on the other hand, you know, he is coming in with a mandate to bring down prices, right? He is coming in because of inflation. Inflation is the destroyer of empires. And if they're coming in thinking that they don't have to worry about it, given that it's going to make the market rally, I think they're in for a pretty rude awakening in the midterms and then in the next election.
But couldn't you see him very pinning that on the Democrats?
You think somehow he could?
Yeah, it's like, this is all Bidenomics, an extension of it. Look, I'm the one rallying the stock market. He's the one causing the inflation.
Oh yeah, for sure. He's blaming it on the down. I mean, 100%. If it starts getting, it's just going to be stuff that's happened before his. We know that. But okay, so if we have all this uncertainty, maybe we just go back into the markets here too. Like if we have political uncertainty, we have, you know, corporate profits are obviously been robust. It's been strong, but we're coming into earnings season here. So I think a lot of investors may be looking at sitting on some nice gains from 2024 saying, well, you know, I don't know what this earnings reports are going to look. The banks are going to report this week. Mega cap tech's going to start reporting in a week and a half. Maybe investors are just lukewarm to jumping in ahead of those reports. Do you think they're waiting for, you know, to see how those earnings look?
Yeah, I mean, look, you know, what do you think about, you know, along those lines? Like, look at Nvidia. Isn't that like a strange case of, you know, obviously a stock that's driving the market, and now, you know, it's like, you know, a very successful speech at CES that suggested like this massive expansion opportunity for the company, and the stock's coming off because of that. Is that maybe what you're thinking, you know, that people want to wait to see the earnings before they're ready to pile in there?
I think just crowded. I think there's an uncrowding of these trades right now, and that's normal market, you know, like what happens where everybody jumps in and everybody's excited. And definitely I watched that event too. It was exciting, you know, they're bringing out their own humanoids and, you know, talking about all the different stuff, you know, and all the places that Nvidia is going to be. And the stock goes up significantly the next day, and everybody's like, boom, this is how we're going to 200. And then what happens? The market opens and the rug pull is immediate. So everybody that was buying in the after hours and pre-market on the excitement of CES, boom, rug pull. So now everybody's caught. So if all those traders caught, it starts to back and fill, but then you have more, you know, and then it's like you've just got a really crowded trade. I mean, I'm still long Nvidia as well. I've trimmed it, but I mean, at the same time, I'm like, I still believe in the long-term AI story, and it's hard to think of, you know, a better company that's positioned better than Nvidia. But I mean, it's a crowded long. There's no doubt about it. So maybe that's what we're seeing too, is just, you know, traders just, you know, looking, you know, elsewhere, a little bit of diversification away maybe from those mega cap tech leaders.
What are you seeing in the options market, George?
Yeah, I mean, I actually saw like my relationship with Nvidia this week especially is complicated. Because I actually have seen it come down like as low as I see it in that option sentiment. I think I saw it hit 56. It's very typically up in the 80s, high 90s. But you know what's interesting is I've been saying for a bit that I'm worried about chips this year, and I'm worried about chips because I think it's an obvious, if there are tariffs, you know, that's our main export there. And if China wants to hurt us, you know, hurting Nvidia, which would hurt our whole market, I think is an obvious way for China to strike back. And we did even see Biden on our side, even limiting sales into China as well, even more. So I think not only is there that, right? But if we're limiting the sales into China, right? If we're looking at, a complicated tariff situation, all of a sudden we're changing the game theory, I think, for China, where if we're both giving them less good chips and creating an incentive for them to hit us back through chips, all of a sudden we might hear about, domestic chips being bought a lot more there, even if there are some performance difficulties, just to hit us back. So I'm really, I said I have a complicated relationship because it was right as I was saying, like, oh, I think the chips industry actually looks a little healthy that I predicted. I had NVIDIA in my portfolio this week. Of course, it's doing poorly this week. But yeah, I do think that until this China tariff Trump situation gets worked out more, I'm worried about like NVIDIA, the US, chip industry more than anything in terms of where they would hurt us back.
I mean, even looking at the China stocks themselves, I mean, still a mess. We keep thinking, valuations are going to eventually, value investors are going to look at this area and say, hey, these stocks are cheap. They're doing a lot of things right. But there you got Alibaba back at 80. You got Baidu, another one, making new lows. Pinduoduo, which has been a darling, back under $100. The FXI itself has leaked away a lot of those October gains. I mean, China stock market, looks like a mess here too. It's funny, you got, our end, off 3-4% from all-time highs, but there's just so many pockets of weakness elsewhere. And China's been a mess for a long time, but the turnaround story that you keep thinking is going to come just isn't coming. I'm not sure it comes under a Trump, at least, and not in the beginning under a Trump administration. So it's a tough story from a political front and even from a technical front if you're a chartist.
Well, it's hard. Like the problem with looking at like China and value investing is I can never really say that confidently that a China stock is a value because I don't know if those are the real numbers. Right?
Numbers. Making me laugh.
I could be like, yeah, that like those numbers.
They don't have GAAP accounting.
Yeah, exactly. It's like, those numbers look like value, but are they the real numbers? It's like the unemployment number, that could be much higher and is already just like a horrible number, right? And then if you specifically, if I were to buy a China stock based on, quote unquote value, right, it would be Alibaba, it would be Pinduoduo, right? And I have that first thing is, are they real numbers? And then the second thing is like, how big is unemployment? What is consumer spending going to be like? Is there a plan? Will it get worse? Like, so you have like multiple potentially like falsified numbers working against any kind of a real valuation estimate there.
It's a good point.
Yeah. I mean, what can you can't trust anything. Obviously, there have been huge controversies of interlisted Chinese names and the need for actual accounting firms to be auditing them. And that's been a war waging in the market microstructure world too, with the NYSE and all the Chinese names they had listed. So it's a fair point. So all right, well, let's talking about tech companies exposed to China. Let's get on to Tesla. Dennis, your favorite stock.
Yeah, it's been my favorite stock for a long time. I've obviously, been, on the Tesla bandwagon, drank the Musk Kool-Aid, been involved with it for a while here. I was wrong with a long time. I was saying that. I started buying it back in the summer, and I was long at a 190. It went down to 140, and I just kept buying more because I was like, eventually the story here is going to carry the price. And it took like 5 months, but eventually that story did start carrying the price. And obviously the Trump and George was actually on my show Pre-Market Prep. I think it was a day or two days after the election, and you were talking about Tesla too. And I want to give you some props because the Tesla popped up obviously after Trump won the election, and the stock was trading at 290. And I'm like, there's a lot of people ringing the register, and George's like, I'd actually be buying it, at 290 because what kind of a position is he in now? I mean, it's so much better. And obviously the stock went up to 470. So great call by you on that, George. I mean, I'm still long Tesla. I still think the long-term story here is healthy. I don't have any on for a trade. It's just in my long-term retirement account. And I actually bought a little bit more on the little weakness here. I'm just kind of dollar cost averaging into it because I think the long-term story here is still good. What are your thoughts, George?
I actually had it. I took it on a very nice ride. Thanks for the props.
Yeah, you did.
And I got out because net option sentiment turned. Like, a net option sentiment runs, I'd say, if there's one thing that runs higher than NVIDIA, it's probably Tesla. Just like typically. So 70 is a very low number for Tesla, and I got out for that reason. It wasn't perfect timing, but it was pretty close to perfect. And I think,
Nice.
I think if you own Tesla, if you own NVIDIA, like, I do think some of you has to be a swing trader, right? I think, to your point, like, yeah, there can be some that you keep in your long-term portfolio, but it's just like, you almost have to assume that it's going to swing to a point that's like too high, right?
Yeah.
And then swing to a point that's too low. And this is in quotes, because who knows what the fuck the real value of these companies are, right?
Yeah.
But like, you have to be prepared to do that, and you have to be prepared. And like, that's the toughest part. And like, that's why I like thank my lucky stars that I have something like net option sentiment now, because I used to be terrible at this kind of thing. But you've got to be willing to say, like, this game of musical chairs is going to last so long. I got to take profits. And then I also have to be quick to add more if I think I'm seeing a floor. And I think some percentage of what you put into a Tesla or an NVIDIA, like, you are leaving a lot of money on the table if you're not willing to do that. And I love it long term, but I think it might have some more ways to go down before. But like, the other thing is, obviously, what I said is like, I expect that it's running around the election, and it's running because there might be some big Tesla self-driving announcement around the Trump administration. So that's something that I'm hoping that option sentiment will let me back in. But that's the other side of it, where it's like, you might not want to dump it because it could be, any day. It could be Trump tweeting a few days before inauguration that, Tesla's going to get full self-driving nationally, and, they're going to be the only ones that get it, right? And that's, going to be a terrible thing to miss out on. So I like it. I like it long term. It's not in my high conviction portfolio right now, but I am watching it like a hawk because I don't want to miss it. I think another big run up is inevitable. I just want to time it right because I think there could be more downside before it.
And the timing on it is somewhat difficult too. I mean, not even somewhat difficult, very difficult sometimes, because it can be prone to random headlines. It's like, okay, we could get ahead of the earnings report and say the earnings are going to be good. But I mean, there's going to be announcements. There's going to be different things that happen. Like, I mean, can be random, those headlines. So timing of it, is difficult too. And then analyst commentary always pushes the stock around. Obviously, if Jonas, who's been a bull, Dan I's been a huge bull there over at Wedbush. But there's a lot of, bears on the street, a lot on this stock still. And, I think a lot of the Tesla recent sell-off was multiple firms, downgrading the stock and basically, reiterating they're underperformed. And the street listens. I mean, we can say they're right or wrong, but the street listens to these analysts and they push price around. So it's difficult, the timing of it. That's why I've got the core position, the long-term portfolio. I had it on for a trade as well. And to your point, George, I'm not in it for a trade at all right now. So I have no Tesla on for a swing trade. It's just in my retirement account. Would I add it to a swing trade if it starts to look healthy? Absolutely. Just to like basically play it that way too. But I mean, there's a question here. And I've often asked myself this question. Should we all just be swing traders and not long-term investors anymore in this market environment? Especially when I'm calling for a fade year. I mean, I literally could look at my long-term portfolio and say, well, here's my long-term outlook. I'm looking for the S&P to be in the same spot it was to start the year as it is to end the year. Well, why not take my long-term portfolio and just trade it all then? If you think it's not going anywhere. Should we all just be traders?
Or selling options all the time?
Or selling options and hedging ourselves to a certain extent, which makes us traders?
Right. Yeah. I think Tesla, one of the reasons I bring it up is because I hear you guys bullish on it all the time, and I struggle so badly with
evaluation.
This is not a stock I can bring myself to buy.
Yeah.
And it's been a mistake, sure. I mean, NVIDIA makes up for it, so it's fine. But like you look at Tesla and any sane valuation, it's just I don't see it because I don't buy into any of the tech that he purports to have, because he never does. It's never actually true. It's never close to what he says it is. And yet you're right. I mean, we are full, the US is full on oligarchy at this point, right? It is totally reasonable to think that NHTSA in a Trump administration is going to be like Tesla gets full self-driving and nobody else. That would not surprise anyone. And if you're not in Tesla, man, are you going to miss out on that rally. And yet, like, how can you as a rational, like, sort of value investor take in like such corruption into account, but how can you not now? I struggle. Tesla is one of those things I struggle with so bad because of that, because it's not something that I can bring myself to pull the trigger on, and yet the story it seems totally clear.
If you see Tesla as a car company and that's all, and there's a lot of investors that are out there, and they may be right, you sell the stock today. If you see Tesla as just a car company, I'm saying it again, you sell it today at $410 if you think it's just a car company. The only rational reason to be long-term invested in Tesla is that you do believe it is a technology company that is working on so many other things. And you believe that humanoids are going to be as common in the world in 10 years as people. That is the reason. That is the reason. That is the bull thesis.
The optimist thing is so absurd. It's not like there's no reason to think Tesla's going to have any kind of market, piece of the humanoid market, given that like the robots are actually going to be able to have to do something. Like hold up Boston Dynamics next to, and Spot next to Optimus. And you will just fall down laughing from a technology perspective.
It's different though.
Right?
And I've followed Boston Dynamics for years, and they're working on different things. The physical movement of the humanoids in Boston Dynamics is incredible. Those things do somersaults. Amazing. If Boston Dynamics wasn't attached to Hyundai, I would be involved. I would be long Boston Dynamics too. Fully believe in Boston Dynamics.
But there's Hyundai, right? Hyundai. What about General Motors? I mean, like, they're doing amazing stuff with autonomous driving. Far more impressive than what Tesla's doing. Same with Google and Waymo, right?
Like, I completely
Waymo is like, if you look at a Waymo car, like, and the tech on it compared to a Tesla, it is absolutely insane. And so insane to think that truth might happen where Waymo's not allowed on the roads and Tesla is.
I know. That's what I'm saying. And this is something, Dennis, where like I spent some time before Irvin. Like I worked, strangely enough, consulted for General Motors for a year, helping them in like software development for their autonomous program. I worked with like as a consultant to Boston Dynamics for a little while, and got to drive Spot and see all the stuff that they were working on. And like that shit blows my mind. What they're doing blows my mind at how impressive it is. And then I see like, this joke of a robot being, that's actually a human carted out on a stage that can do nothing. And people are putting that valuation into Tesla, driving it over $1 trillion. It just seems like it's not like there's nothing, but it's such a paper dragon.
I completely disagree with most of what you're saying actually there. And the reason is this: look at what Elon Musk has done with SpaceX. Look at what he's done with SpaceX. And people said, "There's no way in the world those boosters. He can't do that. He can't catch this. He can't launch this. He can't."
How much was Musk involved in that?
He runs
SpaceX did something.
He runs how much is involved with SpaceX?
I believe he runs the company.
He's on the floor of the Tesla factory and he's tweeting every day. And I don't know how much.
It's the people you put in place. So when you're running any business, it's about the people you put in place. He's put the right people in place with SpaceX. Absolutely. So if you believe, and this is what when my long-term portfolio, this is how I position myself. I believe I invest in people who I believe in. For forever I was invested in Apple, because I believe in Steve Jobs. I was invested in NVIDIA. I believe in Jensen Huang. I'm invested in AMD, which has been a disaster, but I believe in Lisa Su. I also believe in Elon Musk just because of his accomplishments. His timelines are absurd. He never hits a timeline, but his accomplishments are pretty impressive. To think about what he has done, even outside of Tesla, but even inside of Tesla. I mean, the full self-drive technology is incredible when you think about it. You can say it's a joke. These cars are driving themselves, Dave. They're driving themselves, and they're not perfect yet, but the car makes decisions. It's pretty impressive.
Safety-wise, they're not great.
Well, in the last, so here we were and a critical disengagement were one, and what was it? The new stats, we had 600% improvement from where we were in August. So it's starting to get, even better, where it was actually, I think it was every like 12 miles at some point.
Maybe. I
There
mean,
was a
if you
critical
trust that,
disengagement.
if you trust anything out of them, right? Like the whole point of, oh, this stuff is much safer than human drivers, and then it comes out that it's disengaging before, any accidents.
Well, you're not there yet.
Not counting those as statistics.
We're not there yet, but
crazy.
So Gary Black, who follows it closely, and again, we don't have all those statistics. Everybody's guessing to a certain extent.
Yeah.
But under, what he was quoting yesterday was critical disengagements went from, a year ago to every 12 miles to up to 550 miles now. That's a pretty good improvement in a year. Waymo's critical disengagements are at like over 100,000. So it shows, Waymo, how they're doing it. The difference with Waymo and Tesla is Waymo is a robotaxi company. Tesla's trying to put this on everyday cars. Like, you don't have to go spend $180,000.
Sure, but that's what General Motors did in San Francisco, which is, it doesn't get much harder than that. So, like, yeah, General Motors might not look from the outside like they're really competing with these guys, but they took on the absolute hardest thing to start so that they can do everything else after that.
I mean, it's absurd to think that Tesla's going to be the only one in full self-drive. So we're not going to argue that point here either. But it's also, I think, I think there's a point to say that Tesla, if they figure it out and they just turn on the on switch and all of a sudden, you get an update and your car can drive itself, is that not an attractive thing? Google isn't in the business of selling cars. So comparing Waymo and Tesla is not even, really worth doing, because they're not in the business of selling cars. Nobody's going to buy a $200,000 Waymo.
Sure, but that means that, they can work with all the car companies, right? Also.
But who's again, if the technology costs this much to make it happen, who's going and buying a $200,000 car? Tesla's trying to do it on their $35,000, low model. So, I mean, if just hypothetically situation, let's just say Tesla figures it out. They get to the point of critical disengagements being one every 100,000 miles. FSD turns on. I mean, it's a pretty cool feature that your car can drive itself. At $35,000, I'm buying a Tesla. If my GM can't drive itself, but my Tesla can, sure, I'm going out and buying a Tesla tomorrow.
It's just a big if with a bunch of video cameras.
Well, it's not though. If you look at the trajectory of where we're going, though, they're making serious progress here, Dave. So okay. I challenge you. Just,
all right,
go out there. And again, we can
all
be
right,
on
fair. Yeah,
it's fantastic. That's why we have a market. We have
both in the middle of you two a little here.
Yeah,
and right. I think that the way I look at this kind of thing is look at what's happening with like Qubit and IonQ. And
that's great. That was exactly what I wanted to ask you about next.
Yeah. Look at all these nuclear companies, the way they're overvalued too, right? I think and it kind of goes back to where we started here, which was basically like, okay, do you have to be a swing trader? Do you have to be a trader in today's market? I think the answer to that is yes. I think it is absolutely yes, because momentum is part of value now. You cannot have, it's not always part of value, but part of the value in any growth company is a momentum component. And you have to be prepared to evaluate that. And that's where I kind of cut down the middle of this. Are we overvaluing the Tesla bot, or, maybe the field of what else Tesla could produce, or, how fast they could roll out full self-driving? Absolutely. Do I think we're valuing it more than we're valuing quantum computing in terms of a markup and delivery? Absolutely not. Like, compared to nuclear, absolutely not. And I think when you kind of use that relative value component, I see it more.
Great point. And I mean, it's all speculation. And I had, somebody reaching out to me today and saying, how can you justify paying, 150 times or 200 times earnings for Tesla? And I'm like, because I've been investing for a long time, but really, companies, people get caught up in looking at, the balance sheet and the money they're making and saying, look, it's trading with a PE of this, and that's what I'm going to pay. But companies really aren't valued in the market on how much they make. They're valued on how much they're projected to make in the future. So, I mean, it all depends on where you have those projections. And those projections for Tesla are all over the place. All over the place. Some people think it's going to be making just as much. Some people think there's still Tesla Q people out there, that there's no Democratic voter that's ever going to buy a Tesla here again. And we're literally, a year or two away from Tesla going bankrupt because he's pissed off half of his buyers. I mean, there's an argument there. I can appreciate that argument that, there's a lot of Democratic buyers out there that may not buy Teslas. I'm actually concerned about, the short-term performance, just that there may be that hangover from the election that a lot of Democratic buyers might not buy a Tesla. But I mean, it's all about future projections of earnings. With the quantum stocks, when Jensen Huang said 30 years away, it was over. It was over. He literally took a harpoon and put it through every one of those stocks because people were thinking this stuff is coming next year. When he said 15 to 30 years away, market is so impatient. It's like, nope, we're done. And all those stocks crashed and burned.
Do you think that's it? Is there any coming back from that?
No, I don't think so. I think there, and again, I said it today on my show. I said they were oversold. I actually had bought RGTI in the fives because I thought that it just had gotten overdone. I bought it last night in the fives, but that was just for a trade. I'm already out of it. I said, I think this could see 7 or 8, but you think it's going back to 20 anytime soon? I don't think it may never go back to 20. So, I mean, it was a nice bounce trade in these things, but to think these things are going right back to where they were, I mean, they were just, I don't think after those Jensen Huang comments that's possible.
Kind of funny because NVIDIA does have a quantum computing department. I know the guy who's one of the leads there, and I think it probably was a gut shot.
Holy, did he ever? I never seen. I said that was most violent bubble pop that I think I have ever seen. It was they were all down 50% the next day from basically all-time highs. It was the most violent bubble pop that I've ever seen, and obviously one comment. Just and obviously not even from those companies, just so incredible to see the power of NVIDIA. That's the power of NVIDIA at work right there.
Yeah, for sure. And the comment was like, it's funny if you're in quantum and you don't realize that it's nowhere near viability. Maybe you shouldn't have been buying quantum stocks. I mean, maybe you bought them because you're like into the Reddit frenzy and all good, sure, but like, get out of the know that it's a trade. That's not an investment, right?
We're all gonna follow George. I want to this is it with the trading aspect of it. I mean, I've said this for years. I do a lot better with my trading than I do with my long-term investing. So overheated.
Oh no, and we've lost George.
Maybe it means I'm overheated. That's funny. But I've always done a lot better trading than I have with long-term investing, because long-term investing goes up and down and all over the place, and you're trying to hold stories. And I've held stocks, you believe in the story and they end up going to zero. That's happened too. It's long-term investing is tough. People say, that long-term investing is the way to go. It's tough, man. It's tough to hold these things forever and like these good stories and when to get out. I mean, some part of me wants to go with George and just say, let's just trade it all. It starts cutting down, breaking momentum. Let's get the hell out and give that to somebody else. Maybe that's the way to go. I could be talked into it. And now he left.
All right, folks. Now George is gone, but Dennis has given up investing. And
after this segment, I'm giving up long-term investing. I'm selling all my momentum stocks here because we're going sideways for the year. I'm just going to now trade everything. So, George, I don't know if he's
all right. Well, on that note, I don't know. I don't think so. So on that note, we're going to call it. Oh, wait, here we go. George, we got you back.
I moved to Prospero Labs.
Yeah, the system couldn't handle you.
We were just saying, you've talked me into giving up my long-term investment portfolio. I'm just going to trade everything. I mean, I've kind of talked into it. I've been trying to talk myself into that. I just want somebody else to talk me into it. But it's a bit of a joke, but
the point that I actually made in my newsletter this past Sunday was that, I think where it used to be that you could do that, right? Where the market moved like that, it didn't move as much on momentum. We didn't have technology, I think, which moves everything faster as it is. There's so much things to shifting these to shorter timelines. Part of it, impatient retail investors. But I think it's more just you have to have all the tools in your toolkit, right? And if you want to just buy, I say, hey, you want to buy something for 10 years, buy Microsoft, Amazon, and Google, right? Because those cloud providers are going to be here no matter what, right?
Amazon's
Come, unless we go full apocalypse, right? But anything else, you're going to have to pay attention, and you might have to pay close attention, and you might have to do things like try to sell Tesla at the right points. Otherwise, you're going to be leaving a lot of money on the table, I think. And the big point is with the severity of bear markets, right? You could be coming along for 5 years, making money and lose all of it in a few days. And if you don't have that trader mindset where you know when to bail, that is almost definitely going to happen to you in the next 3 or 4 years.
I mean, the quantum stocks just did that. You know, they made some people up 300-400% here in like a week and 2 weeks and a month. And boom, 3 days. Gone. I mean, that's scary.
And it's gone.
And it's yeah, South Park. And it's gone. I love that saying, but so true.
I have to say that episode, they covered, and they do things so well, but they covered like the minutia of securitizations and the like. I love how they throw in like the chicken getting its head cut off just to be all ridiculous too. But it's just like that's where when people say like South Park's like toilet humor, it's like, well, yes, it is, but also it's like some of the most intelligent television.
Frankly, like it's a very reasonable statement on the state of modern economics theory, right?
Yeah. And you also have to love Randy in that one in the robe, like as Socrates, like talking about like the economy as if it's like a god that they angered. That I think is my favorite part of that episode.
Oh man. All right. Awesome. On that note, we're gonna call it, guys. Again, thanks so much. Really love having you on. Super insightful and interesting conversations all the time. Dennis, I will have you back on when the Eagles beat the Lions in the NFC Championship, but only for a quick brag session.
I know. Go Lions! Let's do it!
All right,
it's our year, baby. This is it. Yeah. All the pain and suffering for my entire 48 years of life is going to now be worth it. It's going to be worth it this year, folks.
Sorry, there's going to be more pain and suffering. I'm sorry to tell you.
And lose the Chiefs. That's what's going to happen.
Or Buffalo. I don't know. I don't know if anyone can beat Buffalo, but if they can, it's the Chiefs. So we'll see. But guys, thanks. Next week on Let's Talk Markets, we're going to have a macro markets episode. So we'll be welcoming back Ophir and Claudia, and we'll talk more interest rates and inflation and labor market. And try and continue to figure out what's going on and what's going to happen. So thanks, guys, as always. And thanks, everyone, for tuning in and listening. Great to see all 2,000 of you as we usually do. So thanks again. And everyone have a great week.